Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin and the probabilities per scenario, starting with the medium time frame bearish scenario where we're still expecting a three-wave structure to the downside in a wave Y, with the most common target being between the 1 and the 1.236 trend-based fib extension taken from the high to the low of W to the high of wave X. You also see two fib times on the chart which are taken from the same pivots over here to compare the length in time of wave W with the length in time of wave Y. The minimum target I would usually look for is the 1-to-1 over here, which is currently sitting on Saturday the 22nd of July, with the 1.618 sitting on Tuesday the 8th of August. Now this means that the high of wave X has to be in then a three-wave structure expanding flat, which is a 3, 3 and then a 5-wave C to the upside, where the highest target for a wave C is the 1.618, which has been very nicely respected, as you can see with the candles closing right below on the 12-hour that 1.618. Now that has to then be the end of this of being a 5-wave structure, so a 5-wave move to the upside. And for the first time on this scenario, I want to talk about this over here, because from experience and also from statistics, I do have to say that if you get a very impulsive move to the upside with very shallow retracements, then the probability of that being a C can be actually quite high. Of course, we are in bullish market structure towards the upside for also potentially this being a wave 1, but I just at least want to make you know that this over here, very shallow retracements, is also very reminiscent for a wave C, and that the price action over here can also be the beginning of an expanding flat to the downside, which then is the first structure of then potentially a three-wave structure to the downside in a wave Y. So what is happening locally at the moment is going to be super important for the preferred scenario on the medium time frame, because this is the bearish. And in the bullish scenario, this move to the upside is a wave 1, where wave Y has already finished, and we are then looking for a wave 2 towards the downside. Now currently this potential wave 2 has hit the 0.236, which is a rare target, very rare target for a wave 2 for then continuation to the upside. But as it stands locally on the micro, all of the bullish scenarios are actually very unlikely, and preferably price is going to make another low. The 382 is also a rare target, but at least the 382 is in confluence with a bit of a support box over here, which is between 29.1k and 28.8k. And if we look to the lower targets, then the most common targets for a wave 2 are between the 0.5 and the 0.786. Now you can also see this is quite a big gap, and I do think if price is going to move to the downside, price can move to the downside relatively quickly, even though we have the support area over here. If that support area is giving in and price is going to get through this area, I would expect price to go all the way to the downside to at least the levels over here of 26k, where we also have a little bit of structural support because of the range that we had over here. If we then go one time frame lower and we go to the 4-hour, then what you see over here is the structure to the upside in more detail. And I was talking about shallow retracements, this being then a 5-wave move to the upside, where you see this wave 2 bouncing on the 0.236. Then again, the 0.236 is a very rare target for a wave 2, and very shallow retracements are reminiscent for a wave C. I've seen it many times over, so that's why I at least want to have you think about a potential wave C. In the bullish scenario, this is a 1, followed then by a 2 and looking for a 3. But in the bearish scenario, we could have this as the end of C, and then an A, B, C expanding flat potential, looking for more downside, right? Even if price is then going to bounce after an expanding flat, even if it is going to bounce over here, we can have a retracement up and then continuation down. So this is going to be incredibly important what's going to happen maybe later this week when the news is going to kick in, and also next week. Now you can see I wrote some stuff down, and also something that wasn't on the chart before. So first of all, if we look at this scenario, currently this low over here for a wave 2 has been made in between the 0.618 and the 1-to-1 fib time taken from the low to the high of 1, which time-wise for a wave 2 is nice, because usually a wave 2 is relatively short. However, usually a wave 2 is also relatively deep, and of course this over here is not a deep retracement at all, because the 0.5 is usually a minimum retracement for a wave 2. So either the timing is quite nice, but the retracement is very shallow, or if we get a bigger three-wave structure, then the retracement might be nice around the common areas or the 382, which is still rare, but better than the 236. But then time-wise, this is going to be a very, very long wave 2. And what I then wrote over here is that it is actually more bullish if price would go to the downside now and then move up, because then time-wise you can still argue it's good for a wave 2, but it is going to be more bearish if price is going to first move up, then move down. It's going to take a lot more time, and the longer it takes, the lower the probabilities are going to be for potentially a wave 2. There is the rule of alternation, where it says that if wave 2 is shallow and long in time, then wave 4s tend to be deep and short. But still, it kind of depends on how long this wave 2 is gonna take. If you then go to the micro scenarios, a lot has been going on over here. So price has been moving to the downside, right? Where we expected also in the previous video to see price moving to the downside. However, and I actually want to start with that scenario that I mentioned in the previous video. Over here in the previous video, I mentioned that the 1-2-1-2 scenario, if price is going to move below this target box over here, which was blue but now is white because price went through it, I mentioned that if we close below over here, there is quite a probability of moving to the downside, in this being a regular flat. A, B, 3, 3, and then an impulsive move to the downside. But as you noticed as well, and as I mentioned in that video, this being a 1-2-1-2-1-2 scenario for then a big 3 to the downside, this does not look very nice for a triple 1-2 scenario. And I also explained why. Short repeat, first of all, this wave 2 is longer in time than this wave 2 over here. This wave 2 is also longer than this one, and then a 1-2-1-2-1-2 scenario, where preferably you also want to see a contracting diagonal. That happened, but this last move over here is too long. So this move to the downside is actually longer than these two. And in a 1-2-1-2, like a triple 1-2, what you prefer to see is a 1-2-1-2-1-2, where each wave 1 is going to be shorter than the previous one, and each wave 2 is going to be shorter as well. This is by far most common, and that's not what we see over here. So that explained the doubts that I had in the previous video, but I think I was a bit too convincing with closing a candle below here looking for downside. We do have a bit of support over here actually, which wasn't on the chart in my previous video, between 30k and 30.2k, which has almost been tagged, actually just a reversal now before tagging that area. But still, my feelings, it's not great. And I immediately wrote it on Discord in the update section at 1:22 p.m. Central East European time. So 22 minutes after my video went live, I wrote my previous video. I said, still, I gotta say, even though price moved below the support box, as you can see over here, price dropped. Even though it moved below the support box, I am still not feeling that triple 1-2 scenario. I don't know what it is. It just doesn't feel right to me yet, right? If this is a bigger wave 3 to the downside right now after a triple 1-2, I want to see high volume continuation. This candle to the downside at the moment had less volume than the previous move to the upside, which is the circles that you see. So this move down after a triple 1-2 has to be massive, right? A gigantic move to the downside, very high volume, because it's a 3 of 3 of 3, super impulsive. But this volume was lower than the volume we had over here, which was quite disappointing. So therefore, I'm curious to see how price is going to react at this area, right? Then a little bit later, I still wrote back of my mind, potentially a double or a triple zigzag just before 2 p.m. So again, 42 minutes after the previous video. And then again, some more stuff about that scenario. So basically what I'm saying is the volume over here was actually very disappointing, besides the fact that we were already doubting about a 1-2-1-2-1-2, right? And I'm still not really a fan of the scenario. I have it on my chart in case price continues down, but I might actually prefer the scenario or of either KG or this one over here. So let's first talk about this scenario, where in this particular scenario, we have wave W finished in a 3-wave structure. Then this is a wave X, and we're going to be looking for a Y to the downside, where this is then a 3, 3, and then a 5-wave move to the downside, where if I adjust the pivots for wave B with the low that has been made, the most common target for wave B is in between the 1.236 and the 1.38, which is right around that high over here at 31.745, because this line is one of the 2022 range highs. So one could grab the liquidity, move to the downside. And what I like about this scenario, as well as the one from KG coming up in a second, is that it is, from a trading psychology perspective, mega interesting. Taking the double top, stopping the people out that have their stop loss over here, but also faking the breakout longs, looking for upside. I think that is very interesting indeed, for then a move towards the downside. And in this scenario, wave X is positioned over here, which is quite a short wave X in time. If you take a fib time from the beginning to the end of wave W and you toggle on the 0.5, you can see that wave X ended before the 0.5, but at least after the 382, which is important to me, as the 382 is usually a minimum target time-wise. And then you'd be looking for a 3-wave structure down, right? Where then the confluence area for Y is very nicely positioned with that 29K support area that we have over here. But then the scenario of KG over here might actually be my favorite one. So KG shared this in the group as well this afternoon when price was moving to the downside. He's looking for then an A, then a WXY in B, and then a move C to the downside. And the difference with the scenario that I've just shown you is the pivots of his A and then a B, C. So here we have a W, X, and then we're looking for a Y, within Y an expanding flat. But his scenario is over here an A, B, C, which means the B that he has is higher. So the B over here is around 31.9K to 31.7K, and on KG's chart it's basically between, well, this area over here. Let me go in more detail. So we then have a 3-wave A. We're going to be looking for a WXY to the upside in then a wave B, which can be a complex structure, where the most common target for a wave B is between the 1.236 and the 1.38, pulled from the high to the low of wave A, which is between 31.9K and 32.2K. And as it stands now, the most common target area as well for this wave Y in yellow, that's why the fibs are color coded. So the yellow fibs are taken from the low of A over here to the high of W to the low of X. These are very nicely positioned right around the common target area for a wave B, but also in confluence with the 2022 range highs, for there may be a liquidity grab, and then you get a big C to the downside, because a wave C is an impulsive 5-wave move to the downside. The trend-based fib lines, or the time-based fib lines that you see, are taken from the high to the low of A to compare the time it took to develop wave A with the time it took to develop wave B. And yeah, currently the 1-to-1 over here is sitting at around Friday the 7th of July. Oh, and that is great confluence. Why? Because on Friday the 7th of July, we have high impact news. Imagine this happens on the Friday. We have high impact news at 2:30 p.m. Central East European time. Make sure to check your time zone. But this 1-to-1 is right on top of the news day as well. So imagine during the news, we wick above and then boom, move towards the downside. How nice would that be? Now, of course, this scenario on the higher time frames might result in the more bearish scenarios, but we first have to wait and see how price is going to react. And of course, in all the updates I give, we will follow price and figure out the highest probability moves. And I'll talk about the probabilities in a second of all the different time frames. First, the CVD. So the CVD, price moving to the downside over here, and each bounce was not supported by bullish CVD, but constantly bearish CVD divergences. Over here, if we zoom in, like this structure to the downside, you can see lower high on price, higher high on the CVD. A little bit further over here, again, lower high on price, with a higher high on the CVD. And this just continued with peaks on the CVD, lower highs on price, higher highs on the yellow CVD as well as the blue, by the way. So this constantly happened. Also here, lower highs on price, higher high on both of the CVDs, meaning market longs were constantly absorbed by bigger positions that pushed price to the downside. And as it stands now, there is no bullish CVD divergences locally. This is a higher low on price, but not a lower low on any of the CVD structures. So no bullish divergences to be seen. And we have to wait and see if price is actually going to go to the downside one more time to tag the support area between 30.2k and 30k, where we have a golden pocket which is pulled from this low to then the high and the range point of control of this whole range. Very, very interesting. Now, I've already spoken about the news partly, but also today at 8 p.m., which is an hour after this video is online, we have the FOMC minutes. Usually not too big of a reaction, but it's good to know about for potential volatility. And then tomorrow on Thursday at 4 p.m. we have high impact news as well, so make sure you trade safe. If we then talk about the probabilities, I have to zoom out to the 12-hour because then we first talk about the medium time frame probabilities. And what you see is I actually wrote percentages behind it this time, where for the bearish and the bullish scenarios on the medium time frame, I am now 50-50. And that is because what is happening on the micro time frames. For a wave Y, potentially an expanding flat, as mentioned, can be the beginning of a corrective structure, then a bit of a range, move to the upside, and then down once again. While in the bullish scenario, an expanding flat can be a correction inside a wave 2 for then continuation. It all depends on how price is gonna evolve in the upcoming days and also next week mainly. So that's why in the medium time frame, I'm 50-50. Low time frame, same thing, right? Also 50-50 because we are waiting for price to move to the downside in this scenario, and also how it then moves to the downside. Or, you know, you can never say never. Price just pumps to the upside and never looks back. That's also fine. But currently probabilities on the micro are more bearish. So the low time frame scenario over here, also with a wave 2 or continuation, 50-50. And if we then go to the micro scenarios, then I think my favorite at the moment might be the one of KG that he shared in the group as well. So this one over here. And then A, B, expanding flat, C to the downside. And then we wait and see how far this wave C can go, because a wave C can go very, very deep. I love this scenario, trading psychology wise, taking the double top, baiting people in longing over here, thinking they are like FOMOing, you know, they want to look for higher, but then instead it gets absorbed and we move to the downside. I think from a trading psychology perspective, that's very amazing. On the second place, I would think this one is very interesting. And then on the last place, I have to say, is that 1112 for all the reasons that I have explained in this video. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.